Hi guys, welcome back to my channel. Hope you guys are doing really well. If this is your first time here, I'm Lindy Peters. On my channel we talk about all things financial, saving, budgeting. I also do saving challenges from time to time, so check out for those. And I share my investment journey of stocks and shares and cryptocurrencies with you guys as well. In today's video, we'll be having a look at Agree Realty Corporation. I'll be having a look at the stock analysis and the investors presentation and what's happened in the first quarter of 2021. If you would like to know more about the company itself, I'll link a video on top where I go into more detail about what the company is all about. I'm not a financial advisor, I'm just a financial coach. So please make sure you always do your own stock research before you invest your money. I'm just sharing my opinion and my investment journey with you, but I'm not a professional investor. So having a look at Seeking Alpha, Agree Realty Corporation, ticker symbol ADC, is currently trading at $70.30. Now over the last 5 years, it's up by 55.81%. Now the last 52-week range is from 59.32 to 73.90, and the day range is from 70.09 to 70.53. And if we scroll down, so having a look at the ratings, you will see SA Authors is bullish, Wall Street is very bullish, and Quant is neutral. Now the factor grades, the value is a C+, for growth it's a A-, for profitability it's an A. So if we have a look at the company profile, Agree Realty Corporation is a publicly traded real estate investment trust primarily engaged in the acquisitions and development of properties net leased to industry-leading retailers and tenants. So this company is in the real estate sector and the industry is a retail REIT. Employees is 49 and it was founded in 1971, and this company is in the United States. So if you have a look at the revenue, you will see the revenue has gone up every single year, and even the estimated value for this year and next year is really great as well, showing that the company is going in the right direction. So if we have a look at the earnings estimates, you will see it's up by 35, up by 22, and up by 18%, which is really looking like a great future for this company. Then you also have the valuations and the growth that you can go and have a look at. The profitability all looks great as well. If you have a look at momentum, you will see the S&P 500 has outperformed this stock, and we'll have a look at the dividends as well. You will see the dividend yield is at 3.7. Annual payout is $2.60. The payout ratio is 74.73, and this is a growth of 9% over the last 5 years, and they've been paying dividends for the last 9 years. They are currently paying out 22 cents, and this company is paying dividends out every single month. So if we have a look at the dividend history, if we have a look at the dividend growth, they've been growing over the last 9 years, where the sector has 0 years. And if you have a look at how long they have been paying dividends, they've been paying dividends for the last 26 years, where the sector is only 10 years. So this company is doing really great, but you will notice that they have gone from a quarterly paying company to a monthly paying company, which I'm personally really happy with. Now, Agree Realty Corporation has declared their dividends. So they declared their new dividends would be 0.217 cents. Now, this is not a big difference from what it was. You're earning an extra cent every single month, which means it's an extra 12 cents you'll be earning over the year. Now, I know this does not sound like a lot, but if you have a lot of shares for this company, it all adds up, especially if all your shares that you own has a 1 cent or 2 cents increase over time. That really helps your portfolio. If you would like to get your own free shares in Trading 212, I'll leave a link in the description below that you can use to sign up. I'll definitely recommend, if you live in the UK, to sign up for an ISA account. The reason for that is that keeps all your money safe from taxes. So all the growth your portfolio makes means you don't have to pay any taxes on it, and you can invest up to £20,000 in your ISAs per year. If you're getting value so far, please smash the like button so it turns blue, as this will help me with the YouTube algorithm, and I would appreciate your support a lot. And please make sure you subscribe to the channel so you don't miss out on any of my new videos. So let's have a look at Agree Realty Corporation investor presentation. Now they created a nice little slideshow for us, so let's go have a look at that. Agree Realty Rethink Retail for June 2021. So here's a lot of shops that's renting from them. And here they've got their Rethink layout, showing you exactly what their idea is to be able to do shopping online, shopping in-store, and to order from a kiosk. Agree Realty Corporation overview. Here you can see when it was founded in 1997 by the chairman. Then it went public in 1994. It's a 6.2 billion retail net lease REIT with 1,213 retail properties in total with investment grade. So this is a quick overview, and then here at the bottom you've got some more information you can go and have a look at. Here they talk about the consistency. Here they show you the consistent results throughout COVID that you can go and have a look at. This is quite impressive in my opinion. Now the country's leading retail profile. So if we scroll down, these are the tenants they've had. The main tenant is Walmart. Then you've got Dollar General, Tractor Supplies, Best Buy, TJX, O'Reilly, Hobby Lobby, CVS Pharmacy. So there is quite a lot of big companies that is renting from them that won't be going anywhere anytime soon. Then you can also have a look at the tenant sector. So they've got home improvement, grocery stores, tire and auto service, convenience store, general merchandise, off-price retail, auto parts, dollar stores, pharmacies, and consumer electronics. So then we have a look at the strong investment grade portfolio. 67% of the investment grade is TK Maxx, Lowe's, Costa Wholesalers, Walmart, Amazon, Walgreens. So there is a lot of big names that is renting from them and investing. Then you've got 16% of sub-investment grade, which is floor decoration, Burlington, Goodyear, Michaels, and then 17 not rated, which is smaller places. So I think this shows that there is quite a big future for this company. So national and super region retailers. So nationally they've got Walgreens on there, Lowe's, McDonald's, Aldi's, Starbucks, CVS Pharmacy, Walmart, Amazon, TK Maxx, and a lot of other big names. If you have a look at franchises, they've got 2%, which is big names like Taco Bell, Burger King, Sonic, and Wendy's. Then they've got the 12% super growth regional, which is places I don't really know, but I'm sure a lot of you in America know these places. Limited exposure to sectors that was impacted by COVID. The three most impacted sectors total approximately 4% of the ABR. So the one sector that was hit was the health and fitness. Then they've got the movie and theatre and entertainment and retail. But here you can see the percentage of their investment. So it's not a big part of their portfolio. So they've got a disciplined investment strategy and active portfolio management. Here they explain a bit more about their investment strategy. So then you have the question, what has ADC been investing in? The retail landscape continues to dramatically evolve as markets force disclosure, disruption and change. To mitigate risk in the period of continuous disruption, the company adheres to a number of investment criteria with a focus on 4 core principles. The one is e-commerce, then recession resistance, avoidance of private equity sponsorship, strong real estate fundamentals and fungible buildings, ramping investment activity. ADC has invested 4.6 billion in high quality retail net lease properties since 2010. So here you can see the amount they invested every single year. So let's have a look at the Agree Realty Corporation's first quarter report for 2021. Now increases 2021 acquisition guidance from 1.1 billion to 1.3 billion. They also launched their proprietary technology platform. So let's have a look at the first quarter highlights. So they invested approximately 391 million in 90 retail let lease properties. Approximately 32% of annualized based rents acquired were delivered from grounds lease assets. Increased net income attributable to the company's 41.8% to 30.1 million. That is a 2.7 increase per share to 48 cents. Increased core funds for operations. That is 42% to 53.3 million. That is a 3% increase per share to 84 cents. Increased adjusted funds for operations 41.1% to 52.5 million. 2.3% increase per share, which gives you 83 cents. Declared an April monthly dividend of 0.217 per share, an 8.5 year-over-year increase. Completed a follow-on public offering of 3,450,000 shares of common stocks, including the underwriter's options to purchase additional shares, rising total net proceeds of approximately 222 million. Settled 578,410 shares of the company's forward equity for net proceeds of approximately 37 million. Balance sheet positioned for growth at 4.2 times pro forma net debt to reoccurring 4.9 times excluding unsettled forward equity. So if we scroll down here, there's a lot of other information you can come and have a look at and read through. But I want to have a look at the first quarter of last year and the first quarter of this year. Now all this data is in the thousands, so please keep that in mind. You can see the rental income has gone up with 22 million and others have gone up with over 40,000. Having a look at the operating expenses, real estate taxes has gone up with just under 1 million. Property operating expenses has gone up with over 1 million. Land lease expenses has gone up with just under 20,000. General and administrative has gone up with over 1 million. Total operating expenses has gone up with over 10 million. The income from operations has gone up with over 10 million. So having a look at the net income per share, you will see it's gone up with 1 cent per share. So having a look at the other comprehensive income, you will see there's some ups and downs, but last year they were in a minus, where this year they are in a plus of 55,620,000. So having a quick look at Yahoo Finance, you will see Agree Realty Corporation is currently trading at $70.80. And if we have a scroll down, having a look at the earnings, you will see they beat the second quarter, they missed the third quarter, they beat the fourth quarter, and they beat the first quarter by a lot. So it will be really exciting to see what they do in the second quarter. Having a look at the financials, you will see they have a lot of great growth every single year. And having a look at the recommendations, it's a 1.6 between a strong buy and a buy, with a lot of strong buys, and a few holds. And the current analysis price target, it's currently $70.99 with an average of $78.25 with a high of $82, which is great growth. So I'm hoping to see it hit that high hopefully by the end of this year. I'll leave a link in the description below if you'd like to give me a call to discuss any of the topics in my videos. If you found this video helpful, please give me a thumbs up to let me know, and make sure that you subscribe and ring the bell so you don't miss out on any of my new videos. If you've got any topic requests or any questions for me, please comment below and I'll get back to you personally. Have a lovely day, guys. Bye.